Hello guys, welcome back to my channel. It's Aqua FX again. So today I'll be taking you guys on how you can use high kinetic candle and a smaller time frame to have your sniper entry whenever you want to trade, especially on a gold chart. So guys, you do me a favor to subscribe to this channel, turn on notification bell so that whenever I drop a new video you get notified. So first, you should know the trend of the market. Second, you plug in your high Kanachi candle. You wait for the candle to either close. You don't use a wick. Let's just get to the chart. Let's go to the chart. Let me show you guys how to do it. This is how I managed to have a sniper entry on the market. You guys know I really like this pair called gold. So right now I'm on my gold chart H4. So what I'll do now is for me to turn this chart to the normal, as in I have to turn this chart from the normal candle to my high Kanachi candle. I'll click on my high Kanachi and the candle will turn from the normal candle to high Kanachi candle. This really helps to read the trend of the market. So right now I'm going to mark the high and I will mark the low. So let's work. The reason why I marked out the high and the low, I'm waiting for a candle to close below this wick right here. So if no candle close below this low, once the market come into this low, if it doesn't close below this low, this means that I'm going to be buying this market. I'm still going to buy this market. So how will I buy? Let's get to another let's get to another So how I will buy this market is for me to go back to my H1 or my 30 minutes, and I'm going to need Asia range indicator. You guys know I'm a fan of this indicator, or if not really this indicator, at least I'm going to be looking at London section. But let us go with the main thing. So let's go to my H1 right here. Let's go to my H1. So this is how I got sniper entry. Like now, here is my current position, which I'm waiting for market to come back to for me to take a trade though. So on my H1, you can see here is the low. Here was the low. The market grabbed that low, and once the market grabbed that low, note you don't want any candle to close below that low on your H4. You will not want any candle to close below it with your H4, but it can wick out that low, which tells you that the market makers had just grabbed liquidity on the low, and if it doesn't close below it for you to make a buy decision. Then how you make a buy decision? This is when we look for a break in market structure, a change in trend. We see we have this closing above that level. We have this. It has to close above the level before we look for an entry. So you can see this my marked out right now. You can as well turn this chart now to your normal candle. turn it back to your normal candle, which I'll do that right away. So right here the chart is on my normal candle. I've just turned it back to my normal candle right there. So the reason why I needed Asia range indicator is for me to know the section I'm working on, because I wouldn't want to trade during Asia section. So I'll plug in my Asia range section. So that is my Asia range. So you can see that this leg from here down here was a candle that lead to a breaks of this high, a breaks of that high. So that was what happened. At this time, I was still sleeping, but once the market come into this very zone, it was already done in Nigeria here. They done already the break. It was already done in Nigeria here. So I can't just enter trade right here blindly. I have to move down to my M15 to look for an imbalance in this very zone for me to take a trade to the upside. I'm going to show you other okay, right here. There is a zone, and let me delete this one, and you can see there's imbalance right here. We have imbalance, and that was the OB as the market tapped in and it kept rallies up. As the market tapped into the zone, it rallies up to the upside. You can see the market keep rallies since then to the upside. So let's check out another example. That is the first example. Let's check out back again to our H4, because H4 has to give you direction before you make a decision. So right here again on my H4, like I said, a grab liquidity grab, and we have to, take our entry. So here, let's go here. Okay, here. So right here we have another example. We can see that this market was rallying up, 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 and here you can see that this leg really lead to a break of structure. There was a break of structure right there following this very leg here. So what happened? We are waiting for the market to come back to this zone for us to take our trade on this zone. Like I said, for you to really know what you are doing, you should turn it to a Heikan Achi candle, which I'll do that right away. I'll just turn my chart right now to Heikan Achi candle. So let us go back. So my chart now is Heikan Achi candle. So you can see right now the noise. There was a zone right here at the upside. It happens to be a noise, because that zone is no longer valid using high Kanachi candle. It's really, really good because it filter the noises out and allow you to take a better decision in the market. Once you see it, you've seen it. If it is not there, it is not there, and it will help to increase your win rate. If you are using high Kanachi with the direction of the market, you don't have to counter trend. You just go with what the market is telling you. So right here on this very zone that I draw, here was the week here. You can see that the market comes back and grab this low, but since this market did not close below this very low, we are still going to be buying this market. So let us go to our H1. So you can see here was the zone that back. The market came into this zone and it gave us this very high right here. You can see it did not breach any high or low. But at this point, the market created this high, and it created this very high here, created this high, and it came back and bleached it, as in it came back and violated the high to the upside, which shows you that this market is going to the upside. So what are we going to do? It for us to look for an entry in this market. So looking at this high Kanachi candle, we've seen that this was the last bearish candle below this zone. This very one was the last one, because you can see it is the one that has the longest wick when it comes to this. So we marked that candle out. You can as well use your normal candle. You can as well use your normal candle, which I have to go back and use my normal candle for all of us to see how it goes. So I'll so I'm returning to my normal candle right here. I'm returning to my normal candle right there. So at this point, yeah, so here was it. Okay, you see the reason I said it is better for us to use our normal candle when it comes to H1. It's very okay for us to use our normal candle, because right here we see there was a break of structure right here. There was a break of structure right there. And which of the candle lead to that break of structure? We had this very one right here. We have a zone here. You get have a zone right there. So which you can enter a trade and you the upside, target the upside when it comes to this. So you can have an entry right there. So right here from this very one, because here is the leg. Let's see if true we can have an entry here, or during our it was during a share section or so. So let's check. Okay, so you can see that we cannot enter trade it because it was during a share section, so we didn't take that trade. So this day open, it grabbed liquidity to the downside, and it as well take it back to the upside, which give us a break in market structure again. It gave us a break in market structure. So it gave us a break of structure right there. So which candle give us this which candle give us these breaks? It was this one. This very candle right here give us a break of market structure to the upside. So it for us to take a trade right there, but there is something, because this zone has to this zone fell back. This zone was during Asia. It fall back in Asia section. It falls back during Asia section. Okay, this very zone we can literally, because the market come into the zone. Yeah, this very zone the market comes into it during London section. Like I said, we trade London, so the market later come to this zone during our London section. So we can possibly take our trade right there. We can't just take it blindly. You go to our 5 minutes chart, we scalp it back to 5 minute chart. From this very zone, entering trade with your 5 minutes, it will gives you not less than 1 to 15 or so. If you go to your 5 minutes chart, it gives you something like that, and you target this high here, target the high 1 to 12. But if you go to your 5 minutes, you gain something more than that. So as of this one, we see that this zone fall back at Asia, so we did not take that trade. Then after everything, this very zone again breach structure to the upside, leaving us with this very one, this zone right here. It left us with this very zone right there. As the market breach structure to the upside, it left us with this very zone right there. So you wait for the market to pull back to this zone. As it pulls back, you move down to your 5 minutes chart and you look for a change in market structure, and you target the upside. If you go back to your 5 minutes, you will see something to work with that will give you a better RR than this. So that is it when it comes to uh, a liquidity grab and a change in market structure for you to take a sniper entry. So this is what you would do. Subscribe to the channel, turn on notification bell so that whenever I drop a new video, you will get notified. So the entry criteria you'll be looking at when you go to your 5 minutes chart is for you to look for something like this. Once the market comes to any of the zone you marked, you look for something like this, a shift in market structure, retesting the zone that it comes from, retesting that zone, and you place your trade and you target whenever you want to target. So when the market comes into that zone, you look for it to breach, to break a structure to the upside. Then once it breach structure to the upside, like this very leg now, this leg now break got broken, got taken to the upside, and returning back to this OB gives you an entry criteria for you to take your trade to anywhere you want, as in you target your RR. So that is it for this tutorial. If you find it helpful, you subscribe to the channel, you turn on notification bell. So whenever I drop a new video, you get notified. I remain Aqua FX as I sign out. Peace.